Welcome to the Startup Espresso. I'm Hall T. Martin, the host of the show, where we talk about raising funding for your startup and the time it takes to have an espresso. I hope you enjoy this episode. Hello, this is Hall T. Martin with the Startup Funding Espresso, your daily shot at startup funding and investing. The money illusion effect is defined by Wikipedia as the tendency to concentrate on the face value of money rather than its value in terms of purchasing power. In pricing the product, a startup should list their product price in the smallest unit possible, such as daily cost rather than annual cost. For example, if the price of the product over a year is $2,000, then list the price as $5 per day rather than $2,000 per year. A smaller dollar number will attract more customers. Startups raising funding should focus on what the funds will buy rather than the dollar amount alone. In fundraising, the founder needs to take into account the impact of inflation. Funding buys services that build a business and grow it. Inflation eats into those funds and reduces the runway of the company. Founders should keep in mind the impact of inflation on their cash runway. Thank you for joining us for the Startup Funding Espresso, where we help startups and investors connect for funding. Let's go start listening to today. Hall T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.